Okay, here we go. I'm in the Space office space, and because the internet has failed in my unit, but I'm here and we can get going with these trade updates. Cue the B-roll of where we are in Zanzibar. We've left Stone Town, we're in Firma Town now, so just staying here for another week or so and then moving on to somewhere else. Let's have a look at what's going on. I did a big update yesterday. I hope you received that and read through it, especially coffee and some of the interesting things on Bitcoin and so on. And when I catch my breath after this incredible heat, it's 42 degrees here, and the humidity level has actually dropped, which seems to make it worse than when it's very moist. So it's kind of strange. You'd think it'd be a little bit better, but it's not. Let's have a look at the currency. So we're long on the euro and the pound still, and still short on the dollar yen. The dollar yen is still the one that's leading the way. However, we have reached a critical juncture here on the dollar yen. We've taken some of this profit off, and notice that we've gone back into this rising wedge after a fake breakout through the top, seemingly negating this wedge pattern, but we're now back inside. So it's very much still a reversal pattern, but we're being squeezed in towards this corner. We've got this big order block where we are. All the moving averages below us. This is the day chart on the dollar yen. There's the 20-period moving average holding us up, as is this trend line. Once we break down below there, hit the 200-period moving average, bounce back up for a breakout, pullback, maybe back up to the inside and even the top trend line. Let's see where that comes from. Massive long-term channel, very, very significant line. It's also significant that we had that fake break through the top, back into that long-term channel, and then back outside again. So that's good news. Big bearish engulfing candle on that day, which we pointed out in yesterday's video. So we're still short there, having taken off a little bit of the profit at that line there. Let's look at the 4-hour. And just being cautious and potentially forming a reversal pattern here for a bounce back up into there. Let's hope this carries on moving down, doesn't bounce around too much. In sympathy with that, we've got a long position on the euro, a long position on the pound. You can see we're out of the money on the pound still. As you can see, we had a little 4-hour hiccup on both of these, so we took off 20% on this reversal. So we've reduced our position size slightly, and we're able to add back on if we get the opportunity on another reversal back up again. Going to the dollar index, and this is what sort of monitoring, maybe not governing the whole thing. The top order block, there are my lines. I've sort of captured what I think could happen from here back down to there. This is the Dixie DXY dollar index, and we've broken out of this long-term wedge triangle pattern, which is concerning. But let's see what happens. We are back into this big order block, and the charts are updating slowly because of the slow internet here on the island. And there's the top. We turned around just underneath it at that sort of swing high there. And once again, a fake breakout, maybe, maybe not. We'll see how we go. Nevertheless, we are short on the dollar in general. Now, I don't want to rush through this too much, but I want to make sure this gets out to you in time. There is a little bit of noise going on in the background here once again. I'm sure you'll forgive me as we wait for this to update. Right, forget the stocks for now. We'll come back to that. Let's go to the metals. We're long on all of the precious metals. We're not long on copper. That's the only one. We're long on gold, we're long on Bitcoin, we're long on silver, we're long on palladium, we're long on Ethereum and Bitcoin, not metals, but cryptos. We're long on platinum, and we're long on uranium, which is also a metal. So all the metals, precious metals, and the energy metals we're long on. Bouncing nicely off. Let's go through the day charts very quickly and see what this looks like. So a breakdown on the gold chart. Lots of fake breakouts with a Trump effect. And I have to say, folks, I'm very, very concerned about this missile supply to Ukraine, which has enabled Ukraine to launch long-range missiles directly at the Kremlin. And that cannot be a good situation under any logic whatsoever. These markets are going to be a little bit difficult going forward. But look at this breakout through the uptrend. We broke down through the medium-term uptrend. We're testing it from underneath now. We're hoping, and I drew these lines in quite a long time ago, we're hoping for it to carry on pushing up here off the 50% Fibonacci. Worst case scenario, and I think actually it's probably going to be very bullish considering that gold, silver, platinum, those sort of precious metals are all risk commodities really. When there's danger, along with the Swiss franc, people tend to swing away out of risk assets like even crypto, although that's held up pretty well, but like stocks and some of the other riskier items, and into gold and into bonds and into the Swiss franc. And so I'm hoping that will at least give us some sort of impetus to push up through here. Worst case scenario is we fall back down to this other trend line. Actually, not the worst case scenario. We could go a lot worse than that, down to this order block here, around about 2,300. There's the 200-period moving average. I think that should hold gold up, considering what's going on in the world right now. I know there is a move away from hedging risk into risk assets or risk trades or plays with the Trump effect. But I think that might be being reconsidered right now. So maybe we'll hold above the 200 and get down there. I don't think so. I think we're going to probably try and push up. So we are long on gold. We're long right at this 50% retracement level. Exactly what I thought might happen on the first attempt. The second attempt could take us down a little bit further. But I think it's more likely that we'll hold where we are. The same with palladium, really, and the same with platinum. So we've got platinum fake breaking down through here. Let's have a look at this one. I want to try and get this video out to you as quickly as possible and not delay too much in getting out. I want to get the bare bone basic facts to you. There's the smiley bottom. We see the same on palladium, if my charts will update. And I'm just trying my best here. In fact, I could use my iPhone internet. I might switch to that if this doesn't work out too well. It's interesting, the cell reception on this island is much better than the terrestrial internet because there's only one cell tower and it's a very flat island and it's very tall. It serves the whole island beautifully. There's a smiley bottom on platinum and, well, holding up above the order block, just breaking out of that contrived smiley pattern, a made-up smiley pattern, which I made up. So it's not a real pattern, it's just something to give us a guide. But we did fall into the order block and held above all of these swing lows here. So that's pretty good on platinum. Palladium's actually got a very similar shape structure to it. I've also drawn a smiley face in here too. Obviously I like them. This one held up beautifully on its smiley face rounded bottom bounce. So we're long on that. We got long right at the bottom. And we got long at the bottom on platinum, long at the bottom on gold. And we're also long on silver. I didn't mention silver in the last video, but we did take a trade right at that green arrow there. Once again, I've got two paths, one down to the 200, one down to the trend line. We could have a fake break. We've seen it on a couple of other metals already. So not to say we can't see the same thing on silver. So allow for a fake break, a bust down through the long-term trend line, down to the 200 period moving average. See, there's a similar theme on all of these precious metals. We've got the 200 below us, but we're bouncing early. We see it on gold, silver, palladium, platinum, etc. All pretty much the same, all bouncing a sort of a wee bit early. So that's good. We do have the trend line. We didn't even get to the trend line on silver, but we are long on that already. That was a little bit lucky, I suppose. Sometimes you take a gamble early on a trade and you do okay. Now, natural gas, here we go. Let's go to the futures over at my broker. This is the Black Bull broker, and I'm going to go to the day chart quickly, and then we'll switch across to the Henry Hub chart. I'll try and do a more detailed analysis on natural gas a little bit later on, maybe tomorrow, because I haven't done a dedicated video on this just yet, since I've been in Zanzibar, I don't think. But I've just taken all of my profit. This is the Henry Hub futures contract at Black Bull, the December contract, the front month. It's my broker rolls over tomorrow, midnight, effectively on Friday. And so I've got to be out of this contract no matter what. I've decided to take profit early because I don't know what's going to happen between now and the roll. I don't know what's going to happen this week with what's going on in Ukraine. And I don't know what's going to go on with the dollar this week because we're seeing the dollar trying to pull back. It hasn't done so convincingly yet. If the dollar carries on moving higher, that will put pressure on the price of natural gas. Let's have a look at the Henry Hub chart. So here's the Henry Hub chart, NG1 over at the NYMEX, and you can see this actually looks really bullish. And for that reason, I've kept my continuous contract long from 2.23 over at Pepperstone, but I've exited my futures contract, not because I want to, but because I have to, because we have a rollover coming up. But I will get back into this trade after the roll. Look how beautiful this looks. We've got the triangle, squiggly line, which we followed, my green line perfectly so far, and looking to break up through there. We had a bit of a scare the other day, a couple of days ago, with that little spike down, but only to the 20 period moving average here on the day chart. We did break down through that very short-term trend line, which would have spooked a few day traders. If you're a swing trader, you would have known that the 20-day moving average is the place to look for, to buy, reverse, break, whatever. It's a key pivotal point. Also, the other trend line coming down. So although we didn't add more positions and yet cognizant of the fact that the roll's coming up, we hold on to our position quite beautifully. And although we didn't add on to our long position, we didn't exit the long position, we held on to it. Now, are we going to break through the top here? Most probably. I can't be sure of it, and we have a contract rollover coming up, so I have to exit this trade, unfortunately. But what I do have is another trick up my sleeve. Let's have a look at the Pepperstone chart. Here you can see I'm choosing Nat Gas over at Pepperstone. It's a commodity continuous CFD, which I trade as well, just for the instances when we have to deal with a roll like this, and I don't want to get out of the trade, and I don't want to lose out on the opportunity because of the rollover. Now, this is the natural gas continuous contract, or ETF, over at Pepperstone, and I'm long from 2.23. There's my entry price there. I have two positions on this, actually, one almost at the same price. We bought there, we fell back down, had a reversal off the 200, and I added some more there. So that's at 2.23. Both of my entries, we're currently trading at 2.81. So we've still got some catch up to do on this continuous to catch up to the Henry Hub futures contract. So I expect we could get up to about the $3 level, which is where the Henry Hub is right now, to the top of this order block. And therefore, I'm going to hold on to this continuous contract, and I'm hoping for a move much higher. Now, you may ask me, where are we going to on this natural gas trade? What happens with the next contract over at the Henry Hub? What happens to the continuous? My actual belief is that we'll probably get up to about 3.4 to 3.75 and then reverse and have quite a sharp reversal or pullback, and maybe a bounce up to above $4 thereafter, or maybe not. Maybe we'll have to travel all the way back down to $2. I'm not sure, I'm not convinced, I haven't decided. I don't have to do anything until the rollover is complete. So that's the way we're trading on natural gas, holding on to the continuous. We're now out of the futures contract for a 23-cent profit, which is okay. It's not the best, but it's all right. Now let's talk about uranium. We're long on URA and UEC. Nothing's changed since the last update. We've got good entry positions right at the bottom on both of these on this last pullback, hoping for these to break up. Targets for these, let's have a quick look. And we've still got space to add on these should they pull back. But I think we've sort of tried to get going here already. We're quite near the top on URA, but there is some space to go above here. If I can get these charts to work with the Zanzibar internet, I probably could show you. I don't think it's going to work. But anyway, I think we could get up above $40 and beyond that on URA quite quickly. We're at 32 now. And if you look at UEC, there's also plenty of space for this to move up further. Let's see if we can get the Zanzibar to reveal the past to us on UEC. Looks like not. Okay, fair enough. Doesn't really matter. But I think we're trading at about $8.40 now. We got in way down at the bottom here on these trades, and I think we could get up much, much higher. So that's all looking pretty good on UEC. Now, Brent crude, we've exited all our oil positions. Again, there's a lot of uncertainty. In general, I'm short in my mind on WTI, short on Brent crude. Let's see where we could get short again. We've been short forever, it seems like, most of this year, but now we have no positions on any oil trades whatsoever. So what could happen next? I think we could bounce all the way back up to this green line, about $70 to $75. We're currently trading at 68. So let's say 72 and a half up to about 74, 75, maybe all the way up to the 200 period moving average. If we only got up to the 200 period moving average at 78.85 now, 76.85, we would still be in a downtrend on WTI. Overall, my target for WTI is way down into the very low 60s, then the 50s, then the 40s, and maybe even the 30s. I think we could see quite a large move down. We've got a massive flat bottom building on here. Again, if I could show you the history, look back on your own charts, you'll see we've got a sort of major ledge that we're hovering above now on WTI right over here. And we may actually take a short position today. I don't know. We're going to look at this carefully a little bit later on. But if we do break down through this huge sort of flat bottom break, we could see a massive, sudden and dramatic slump in WTI. Same with Brent crude, although that's not quite as clear. Let's have a look at that very quickly. So not quite as clear and as neat, although, we got a little spike below there, but also a flat bottom here on Brent crude and a flat bottom break below that around about $70 per barrel could take us much lower than that on Brent crude too. Those will trade in sympathy. There's always a few dollars spread between them as we're speaking, and as I'm talking to you now, we're seeing natural gas. And there you can see it's just pulling back a bit off that trend line, which I spoke about a little while ago in the video. I think we'll probably push up through here, but there'll be a bit of thrashing around. And, we've got the storage report later in the week. We'll see what happens with that. And I'm not too sure what the weather looks a little uncertain what's going to be happening in the sort of days and weeks, sort of in the short-term forecast. So I don't know. I think we'll probably see a bit more faffing around here, maybe until Thursday, maybe a dip back down. Just be aware of that, maybe down to the bottom of this order block. And the 20-period moving average, now that we're expecting a long-term uptrend, long-term in commodity terms, we'll be looking at the 20-period moving average on both the 4-hour chart, that's this line here, the green one at the bottom of the order block. We don't want to get down below there on the short-term charts, and we don't want to get below there on the daily chart either, the 20-day moving average. And once again, we'll just wait for this to update and jump cut this, Jesse. Thank you very much. Maybe play a bit of B-roll of Zanzibar, which is causing this delay. So there we go. There's the 20-day moving average on the futures down here at about $2.80, something like that. We're currently at $2.94. So we could still have a 15-cent pullback on this contract and still remain bullish. So keep that in mind. Don't get panicky. It's a very good pattern. I like the prospect of that breaking out through the top. So to finish off, we're still short on the dollar rand, pound rand. Those are going to squiggle around a bit more as well. We're long on the VIX. That looks like it might be trying to bottom. But if the stocks take off again this week, who knows what's going to happen. You know, if there's going to be escalation in war, Russia, Ukraine, Middle East, there's going to be a stock market rally. It happens every time a coconut. Having said that, we are long on TLT as well. A little bit of bounce today in the pre-market. We've up a little bit, so that's looking pretty good. My long-term analysis on TLT, once again, if we can get the Zanzibar net to show us and reveal its secrets to us, I'll show you the long-term path. But you can have a look at my previous videos. I've sort of documented this in all of them. And if I seem a little tongue-tied and out of breath, it's because it's incredibly hot here and very difficult to do these videos sensibly. But anyway, there's a green path. Let's see if we can squeeze this in. There we go. Let's do it this way. So that's the sort of thing I think we could see. I'm going to force this to show us whether it wants to or not. There we go. Okay. Anyway, much higher on TLT is my prediction. Oh, let's see if we can come back to that. Showing great fortitude in the face of adversity is what all good traders do. That's what I'm trying to do. So all the way up to about 140, but first of all, around 120, quite a significant and serious pullback, and then all the way up to about 140 on TLT. We're currently trading at 90, so that's a 50% rally. Let's see if we reset this and pull it down, if it'll help us to see. Maybe not. Okay, let's skip that. There you go. You got the idea on TLT. Now let's go across to cocoa. Complicated trade. We're still fully hedged on cocoa. And I've pointed out to you on X and in my previous videos. And I pointed out to you on X and my previous videos my unhedged points. So I want to get out of the long hedges and then weight myself short, balance short. I'll do it at one of these two levels. I've got precise numbers in mind, which my clients have. If you want to know them, join the private group. There's a link below. So we know exactly where we're going to unhedge, uncouple this hedge, and take profits on the long side of the hedge, add to the short side for a move down on cocoa. We've got this megaphone pattern, which I've pointed out to you before, these two purple lines that spread apart. And I'd like us to get up to the top of the megaphone before unhedging in an ideal scenario. Rather than unhedging there, that's, in my opinion, less safe. I'd rather unhedge there, take more profit on the long part of the hedge, and then have a much longer path down. We'll see how we go on that, but that's okay. Looking pretty good so far. We're also long on sugar. Nice bounce yesterday. Trying to break out of this sort of, I suppose you could call it a bull flag. It definitely looks like a bull flag, and if it is, we're trying to get out through the top. And a much higher move on sugar is anticipated after the bull run on commodities starts. I wouldn't call it a super cycle. I'm not into the super cycle theory, but a bull run's good enough for me. We're also long on soya. Right at the bottom here, we've got two beautiful long positions on soya, and this needs to go up a long way, as you can see. We're trading commodities, as always, from the bottom to the top and the top to the bottom. Commodities trade in a range. We want to be selling strength, buying weakness. Very simple. Unlike the stock market or some of the other markets, this is a different kettle of fish. So we're long soya, long sugar, we're long on wheat. Disappointing, but maybe a little V-shaped recovery there. I'm not going to go into all of these for time's sakes. We're short on orange juice. Orange juice is taking its merry time. I expected us to be there by now at the bottom of this swing low at about 415. We're still at 477. But we are trying to do this pattern. I might have to drag this along at some point eventually and do that. It still makes sense. So nothing's actually changed apart from the passage of time, as Kamala likes to say. Right, coffee. We have nothing on coffee, but I've done some detailed analysis on this yesterday. I will link yesterday's video to the end of this video. That's my idea on coffee. And I also did I showed you some B-roll in some of the coffee shops here in Zanzibar. But that's what I'm looking to sell into. Some people think we might get to 330 on coffee. My target is actually about 315, but perhaps 320. I like the 20s and the 80s, as you might know. But maybe 320, 330. Rather get into this later rather than earlier. Most traders get into trades way too early, and I include myself in that category. We tend to get into trades too early and not too late. So if you're ever in doubt about the timing of your trade entry, rather err on the late side than the early side. And if you look back on your own trades, and I guarantee this, almost guarantee it, maybe you're different, but probably look back on your own trades, most of the trades where you've gone wrong are simply not because you had the wrong idea, but you got in too early. So err on the side of lateness. We're long on corn, got a long position on corn right from a really nice sort of level here on the breakout. We've got this, let me just show you. We've got this long-term downtrend channel. And this is why everyone thinks that commodities have got a bit of a bull run in them in the future. They're all right at the bottom of their ranges. And so we want to be, they're oversold. But it's not really, we're not talking about technicals now. They're just too cheap. And because all commodities are a supply and demand situation, when it's too cheap, demand increases, people buy more of the stuff and the price goes up. When it's too expensive, people buy less and the price goes down. Well, we're in the too cheap category right now in corn quite clearly. But not only that, we've had this lovely technical pattern. There's the down channel, breakout, pullback, enter. Absolutely beautiful. And that's the way we're trading that. We still have a pretty decent position on corn. And then cotton is actually a very disappointing trade. But all is not lost. We're at the bottom of this range. We're trading up and down above this red line. And that still remains the case and has been the case since June of 2024 this year. We've now bought again at the bottom of this range. Look at the long-term picture on cotton. And as I keep on saying, I've got friends who are cotton farmers and sugar farmers, and they'll be anticipating and hoping for a big move up on cotton. Look where we are, 66 cents. We've been up as high as 150, 160, 150 I think was the top. Was it 150.6. So, but we should be up in the sort of 100 cents, $1 range. We're well below it. We're about, 30% too cheap on cotton right now, so there'll be some demand for that, which will push the prices up. And particularly the hedgers and the market makers and the dealers and that sort of thing will be looking for bargains on cotton right now. And I think that's it, folks, from Zanzibar. Have a great trading day. I do apologize for these rather messy, stuttery, and unclean, untidy videos, not unclean. I think I've got the sort of Islamic thing that's in the back of my mind thing there. But have a great trading day, and if you've got any questions, please post them below, and I'll try to answer as many as possible. And I'll see you tomorrow from potentially a different location in Zanzibar. Take care.
This morning market on my mind. Charts are telling stories, green and red they wine. Commodities, that joke and gold just ain't that kind. Gonna trade my blues away.